All right, good evening, folks. Tim Davis here again with another video. Every time I see something that like really stands out in a big way, I just got to share it because I think we are in the midst of seeing history unfold right before our eyes. Um, an historic overall market move that we probably haven't seen in our lifetime. Historic overall economic downturn, and I think we're really headed for a recession, folks. And I can't stress that enough. Just prepare yourselves accordingly, especially if you are one of those buy and hold investors. Do not, you know, lean too much into thinking that every time we see a big down move, that is the end of the move. Because it could take you a long time to recover if you buy certain levels. And I'll point this out to you real quick, and then I'm going to show you what I've been seeing in the options market that's showing us a lot of unusual option activity. That's also giving us a signal that there are a lot of folks or a lot of institutions that are betting on much more downside ahead. All right, so on the right side of my screen, this is a monthly chart of the S&P 500. See how we got to that high of around 48.18. We're not seeing that anytime soon, folks. And right after that, this is a monthly chart. These are monthly charts. Look at these candles. Look at the steep decline, folks. Look at the steep decline we've been experiencing as we go through this downward channel cycle. Look how high the TTM squeeze got. That's the highest we've ever seen in history. These indicators, folks, really is starting to tell a story. And look at how the momentum is really starting to decline in a big way, and eventually it more likely turn red, and it'll probably be something an historic amount of downward move in this market, folks. I think there's a lot more downward move to go. And look at the wins percentage in a straight downward move in oversold territory, but we could stay down here for a while. Look back in 2001 to 2003, we stayed in the lower portion of this oversold territory for quite a while. That was a couple of years, so I wanted to point that out. From 2000 all the way down to 2003 is when the market started to try to rebound. But it lasted from 2003 to about 2009, only to go right back to where price action fell from in 2000. So folks who bought here didn't really break even until here. And guess what? They lost money. They all they did was break even. It sold off again. And this point did not meet back up for those folks in 2000 to be profitable until about 2013. And that's why I say be careful if you're a buy and hold investor, because the folks who bought back here in 2000, they really didn't break even or didn't make any money until it started to make money until 2013. So it took them 13 years for them to really start to see an increase in their overall portfolio if they started buying over here at the top of this market or anywhere around here for that matter. They really didn't start to see any realized gains until 2013, 13 years later, folks. And look at the mood we're seeing now. This is an even more steep decline that we're going in now. What if it takes another 13 years for this to, come back up and start for folks to see realized gains? That's something to pay close attention to. And I honestly do believe we are eventually going to possibly run past this drop where we dropped in 2020. We're going to run. I think we're going to run past this particular target. This is going to be a level of resistance temporarily. I honestly think we're going to hit that, may get a little bounce, but I think we're going to surpass that and come down and test the COVID lows. I mean, the lows that we've seen from the COVID plunge back in 2020. That's what I honestly believe. This is my opinion only. This massive decline, folks. And RSI is heading straight down, and it hasn't touched our oversold territory yet on a monthly chart. So I do think we're getting more and more signals that we are probably going to be in this thing for a sustainable time. And then once we hit to this oversold territory on RSI, look what happened last time in 2000 when we hit that oversold level. We got down here to the oversold area. We didn't go too much farther on the full stochastic. We just continue to stay down here. Even on the RSI, we got down here held these lows for quite a bit. I mean, stayed down in this area, hit oversold territory in 2000, and then RSI started to bounce. Got overbought again in 2007, and then we sold off again. RSI got to really deep oversold levels. I think we may be in store for seeing an historic oversold level possibly on RSI on a monthly chart in the next year or so. But we could see this really start to really ramp up, and we could see a steep decline, unlike the ones we've seen here in 2000. You know, it took 3 years for this to hit a bottom, and in 2007, it took about 2 years to hit a bottom. This looks more steep to me, folks. I think we could see this really start to wash out in a big way between then and a year. So we may see a quicker rebound, but that's just my opinion, because this move is like really sharp. And if it continues on a sharp pattern, we can see this really happen within the next 6 months to a year, just wash out completely. But the rebound is what we gotta really focus on. How long would it take for a price action rebound? So I wanted to point this out first before I show you guys what the options market is showing as well. The options market is starting to agree with what's happening. It is a steep downturn. The options market is agreeing. Everything else is agreeing. The signals around us as far as inflation is out of control. We saw what happened with the CPI numbers last week. We still got rumors. We still got a war going on in Ukraine. We still got don't sleep on what's happening between China and Taiwan, folks. And the U.S. is really paying close attention to that, because the U.S. has already made threats, already made a stance that, you know, in a nutshell, they're not moving out of that area over there with a lot of the ships they got over there in that area. With China wants them to move out of that area, because China really wants to invade and take Taiwan back. I think that is still unfolding. They were sitting back watching what's happening with the Ukraine issue. If China, you know, sees fit to try to regain total control of Taiwan, it's going to get ugly, because the U.S. is probably going to step in. So there is a lot of fuel in the fire that could help fuel this downward turn in this market that could be with us for a while. Okay, so don't be fooled, folks, about, you know, folks saying inflation is topping. It's probably not topping. They thought it was topping last month, and look what happened. We got a higher CPI number this past week. So don't be fooled, folks. Trade this market carefully, and if you know how to play the downside, I'm telling you, you will be well rewarded if you continue to play off of these bounces in this market and play the downside of this market. All right, now that said, again, got a steep decline. Definitely see it here in the and within the technical analysis in the charts. What the charts are showing us. So the technical analysis is showing us we are definitely in a steep decline. Looking at these longer term charts. Now the options market has been really heating up, folks. Now, one thing I like to point out is that you see this decline that we've seen from 2000 to 2003, and also from 2007 to 2009. One thing that normally happens when you see such a thing, normally the dollar ramps up. Dollar ramps up, and you start to see the dollar really move to the upside. Now, nothing's different now. Start by taking a look at the DXY. I can pull it up. DXY, which is the dollar futures, for most folks use to watch the dollar, but I'm gonna show you a dollar ETF also that you can use to trade it if you like to trade it on a regular market. But look at the decline of the DXY from, and I drew a Fibonacci from the decline from 2001, when we hit those highs and the market started to sell off. Overall market started to sell off. The dollar started to decline from 2001 all the way down to 2008. So and that's when we started to see, now the market pretty much peaked right around 2000, somewhere around there. So about a year later, we started to see the dollar start to decline. So, but before that, the dollar was on a big tear to the upside. And then about a year after the decline of 2000, we started to see the dollar start to peak. And then the dollar started to sell off as the market around 2002, the dollar started to sell off as the market started to try to rebound. Till we got to 2008, the market started to decline in between 2008 and 2002, well, between 2007, 2008. Dollar started to rally just a little bit. Normally, when you have a big breakout in the dollar, normally the market sees some weakness. A lot of times, the market sees some weakness. And I drew this fib tool to show that it is looking like the dollar's on a breakout. It's in a big breakout move. It looks like the dollar wants to really challenge. Dollar like it really wants to challenge this breakout. I mean, this 121 level that it hit back in 2001. So that's something to pay close attention to, that we could very much well see a much higher dollar price in the near future, and with the potential for the dollar to really ramp up, because it's already showing a breakout mode on this monthly chart, really ramp up to head towards that 120 level. That's not good for the markets either. This is the monthly chart. I'm sorry, this is the monthly chart. Now, if we look at the UUP, which is the ETF that tracks dollar, this caught my attention. So the UUP, it's a monthly chart showing that it looks like it really wants to break out. Just starting to hit that overbought territory. So this could just be ramping up for a higher move. And this could really break the level that it's seen back in 2007. We got it to as high as 28.97, then the price of the dollar sold off until it rallied again back towards the end of 2008. But I think we're about to break out above that 28.97 level. I think we got up to it recently. Where are we at now? Let me see. So right now, the UUP is at 28.10. 28.10, folks. I think we are heading for a breakout in the near future above that 28.97 level. And once we get that level break, we can see this really accelerate, maybe above 30, a level we haven't seen at all in the UUP. So that's something to pay close attention to. Now, if I draw your attention to the options market, this is what really started to catch my attention once I saw that we were above 28 already. Some unusual option activity is starting to spur up in the options market. September contracts, look at that. As of the close of business day on the 12th of June, options market was showing up a lot of activity on the call side with the UUP. And unusual option activity is usually when you see the options volume higher than the open interest. And we see that on multiple levels here. We see that here with the 29 strikes in September. We see that here with the 30 strikes in September. We see that here with the 31 strikes here in September. So there's some bets being placed of possibly a bigger move higher in the dollar. So that's something that that's not positive for markets. And then also, if you look at the SPY, which is the ETF that tracks the S&P 500, more unusual option activity that was spotted in here. And it was some big numbers, folks. And I've been seeing this unusual option activity within a SPY creep up over the past several weeks. Multiple different strikes. People have been jumping in and out of here. Different expirations. They just been flooding in here. And we're going to try to find a couple of these just to show you how steep some of this activity has been. Let's see. Let's take a look at the June expirations first and see if we spot something here on the put side. Something that's outrageous. Here we go. Here's one right here. So look at this one. So here is the June 17th expirations. Look at the 370 strike. 130, over 130 contracts traded. That's the volume, and open interest is like 93,000. So there's a lot of activity showing there, folks, on the put side. That's what the contracts that expire on the SPY puts in June the 17th. And if you continue to just go down the chain, you'll see a lot more activity like this with other expirations. Was it July, June? Maybe I seen some more. I think it was around July. So here's some in July. July the 22nd, July the 22nd expirations. You see more unusual option activity right here. The 350 strike puts, 350 strike puts, over 23,000, almost 24,000 contracts traded versus just 630 open interest. That's some unusual option activity as well on the put side. And I think I even saw some folks going out as far as, I want to say, September. Let's see. No, it wasn't September. Maybe it was July 15th. Let's see. There's some more big numbers right here. So July the 15th expirations. More unusual put option activity spotted, and this is up and down this chain. At the 360 strike puts, 123,000 contracts traded, over 123,000 contracts traded versus just 23,000 open interest. The 362 strike puts, over 83,000 contracts traded, just 3,400 open interest. 372 strike puts, 36,000 contracts traded for the volume just set, and with just 30,000 open interest. It's 375 contracts. I mean, 375 strike, over 46,000 contracts traded versus 40,000 open interest. So you get the picture. A lot of activity on a put side with the S&P, and the on the put side with SPY, and the call side with the UUP. I think IWM was another one that showed a lot of unusual activity. Yeah, so the IWM is another one. So let's take a look at that one. Oh, punch it in. IWM. So there's a lot of activity in IWM. Here's a big one. The 167 strikes that expire in July the 15th. The 167 strike is where they were focusing a lot of attention on. 67,000 contracts traded versus just 1,400 open interest. That is crazy, folks. So there's a lot of folks putting big bets on continued pressure to the downside with some of these ETFs. And there may have been some more. And there's a couple in, quite a bit in August. August, they're going all the way down to the 145 strike puts, open interest in IWM, the 130 strike puts, the 120 strike puts. These could be option spreads they're creating, but you get the picture. Folks are really looking for more possible downward pressure on the markets, especially with the IWM and the S&P. I didn't look at the Qs this week. Well, let's glance at that and see if we spot anything here too. So the Qs, there's a lot of activity in the Qs too. Where's some of the unusual at? We have the 245 strike puts that expired June the 17th. 245 strike puts, 47,000 open interest versus just 9,000. I'm sorry, 47,000 volume versus 9,000 open interest. So there's some bets being placed on the Qs as well. On the put side. And if you look at the July contracts, let's see what's showing there. So here's the July 15th expiration. And this emphasis being placed on the 260 strike puts for the Qs in July. 50,000 volume versus 48,000 open interest. On the 240 strike puts, 22,000, almost 23,000 volume versus 8,000 open interest, 8,600. So you get the picture. There's a lot of activity up and down the put side with these ETFs. So folks, with seeing this unusual option activity within the SPY, the S&P, with the SPY, the IWM, and the triple Qs, and then seeing an unusual call option activity with the UUP, that's just more confirmation that folks are betting on much more downward pressure in the near term. So I wanted to point that out, folks, and I wanted to show you guys how these charts are really looking like they really look like a falling knife. On the monthly charts, they look like a falling knife. So famous saying, don't try to catch a falling knife. That saying is in full effect right now. Do not get ahead of this roller coaster because you will get burned. Wait for things to settle if you're a buy and hold investor, and just see how things play out. But I think it's too early to start jumping back into this market as a buy and hold investor. Now, for all you guys who short the market or trade put options, have at it. This is a gold mine for you folks, for us. So continue to play these rallies to the downside, and you will be rewarded. All right, folks, have a great day until the next video.